If you've ever nodded off in a meeting while secretly thinking, I don't really understand this P&L or profit and loss statement, this video is for you. You don't need an MBA, you just need a few minutes. By the end of this video, I hope you'll understand how companies actually keep score. Unless you have a business degree or a hospitality degree, most people are never taught how to read a P&L statement. They're expected to just pick it up. So they focus on revenue or the bottom line and miss what actually matters. I'm here to help you try to fix that. A profit and loss statement is also called an income statement, and it is how companies track performance. Executives use it, managers live by it, and once you understand it, business decisions stop feeling random. A P&L answers one simple question: did we make money and why? It shows money coming in, money going out, and what's left over. Everything else is in details. You can understand any P&L by focusing on just 5 lines. You don't need to memorize anything. You just need to understand what each line is telling you. Revenue is total sales. It tells you how much money came in, but it does not tell you whether the company is healthy. High revenue does not mean high profit. Cost of goods sold are the direct costs required to deliver the product or service. Materials, labor, fulfillment, etc. This is what it actually costs to produce what you sell. Gross profit is revenue minus cost of goods sold. This is one of the most important numbers on the P&L. It tells you whether the core business model works. If this number is weak, then nothing else matters. Operating expenses are the costs to run the business: rent, salaries, marketing, software. This is where most management decisions happen. Net profit is what's left after everything is paid. This is your bottom line. Positive means the company survives. Negative means that it doesn't and will eventually fail. When you see a P&L, you don't have to read it line by line. You can ask these 3 questions. Is revenue growing? Are margins looking healthy or are they shrinking? Are expenses scaling faster than the revenue? These 3 answers tell you most of the story. One of the biggest mistakes is focusing only on revenue. The second is ignoring margins. And third is treating all expenses as bad. Some costs do destroy value, while others will help create leverage. Again, this will tie back into trade-offs. If you understand the P&L, a lot of workplace decisions start to make sense. Why budgets get cut, why hiring freezes happen, why priorities suddenly shift. People who understand the numbers make better recommendations. Unless you're in accounting, you don't need to memorize accounting rules. You just need to know three things: where money comes from, where money goes, and what actually drives profit. And that's how you read a P&L in 10 minutes. Once you understand a P&L, business stops feeling mysterious. This builds directly on previous videos about how companies make money and key performance indicators, because this is where all of that will show up. If you want more practical business skills explained, please like this video and subscribe. In the comments below, have you ever been shown a P&L without anyone explaining it? And how much of it did you understand? I look forward to your responses.